Retire before 40. That would be something, wouldn't it? That's the dream. That's the goal. That's my goal. And right now I think is the perfect time to start investing. One of the best ways I've found of investing is to take a little bit of money, like this nickel, take a product like this Coke can from Coca-Cola, ticker symbol KO, and invest money like this. 3, 2, just like that. If we leave the money in there for a little bit, it'll actually grow into something more. Now, I'm gonna just prove it to you right now, but look, you can hear it. You hear that? Towards the bottom? All right, let's shake it up a little bit, so stand back, but. Let's just go all the way. Spillage. You see the coin? That's in there. And that's how you invest your money. Just like that. Boom! First take! And that's how we invest. Hi, my name is Andrei, Jikh, and in today's video, I want to share with you my investing strategy for 2020. Well, it's not mine, I didn't create it, but for reasons you'll see in this video, it's the one I'm most comfortable with and that I have found success with because I've been super consistent with it, and that is called DGI, or Dividend Growth Investing. Now, I know you might have a lot of questions for me, like, what is your plan exactly to retire before 40 since you are so far away from that goal? Since my investing journey is happening in real time, it's a little intimidating sharing my thoughts because these are all my mistakes and opinions, but if this helps someone out there start taking financial literacy and investing in money seriously, then it's worth making these videos. By the way, this takes forever to edit. Just imagine making 5-star animations for 21 different companies and then doing it all over again for their dividend safety scores. The amount of time spent in research alone, press F to pay respects. So first, here's how I stay consistent. Let's do this together. So I'm gonna open up the Robinhood app and let's go to the bottom right-hand side with a little person icon. Go ahead and click that and click on transfers right below investing, and go ahead, click on schedule automatic deposit, as my parents would like to say. And now I want to select once a month, so monthly, and I'm gonna put in $2,000 per month and click submit. Now, you don't have to put in that much money when you're first starting out. That's insane. You can go as little as $10 per month, whatever you can afford. The goal is to stay consistent so that way we can get into the habit of investing. By the way, $2,000 per month is how much money I was investing when I held a regular job, earning $50K per year, roughly $25 per hour, every single month for 5 straight years. That's how long it took to get to this point, and I think anybody can do that. But for me, $2,000, I can finally start doing again, and I can finally start investing because I'm consistently making YouTube income, which is crazy and amazing, and I'm really grateful for that. But the goal is to stay consistent. Now, let me show you how much money I've made this month in January of 2020 from all the dividends that I got paid. From 21 different companies, this month I was paid $476.62. Almost $500. That's not bad, but on average they'll be anywhere between $550 to $600 per month, except some months pay more than others. But how does this all compare to last year's January of 2019? Let's check. If I go to my dividend tracker on my Patreon page, which allows you to track your investments and tells me a little bit about them, it says that I was paid $464.01, which isn't much. I realize that's only a 2.7% year-over-year increase, but what that does tell me is that by keeping my money invested, at least it's not losing purchasing power. And also something important to keep in mind is that is only for January. I've got 11 more months, but that's not the whole picture because I was also paid out in dividend increases. And this happens when a company increases their payouts to their shareholders. Now, you're not guaranteed, you're not owed this, but really profitable companies usually will pay you either once or a few times a year by increasing their dividends. And for me, this happened 6 times in January alone. And that came from Dominion Energy, Tanger Factory Outlet Centers, 1OK, Realty Income, and Bank of Ozark, which all total just $9 extra for the end of the year, which doesn't sound like much. Like, what are you gonna do with $9, dude? What are you gonna do? But that's like investing $257 at a dividend yield of 3.5%, except I didn't have to invest $257. That just happened automatically. That's pretty amazing. Well, I realize that isn't a lot of money, but when combined with a small side hustle, will allow me to sustain myself on some ramen noodles and perhaps live in a cardboard box without having a real job, which allows me to free up some time to build value for myself and maybe vlog about that journey on YouTube, because it's always fun to watch Mr. Struggle. I was Mr. Struggle just a few months ago.
You can make so much more in real estate.
I know if you do leverage your money, of course you're gonna make more money, but I don't like to borrow money because it makes me feel like my soul belongs to the banks. It's a weird hang up, so it's not really my style, but I care more about getting people started with investing, and I care less about how you do it. I just want you to start, and I'm just showing you what I'm comfortable with. I'm not claiming it to be the be-all, end-all, ultimate way of investing your money. You do you, boo. Now, I need to earn at least $2,000 a month to be considered retired, and I am really far away from that goal. But if you're wondering what I did to get to this point, I'm about to show you what I've been doing to get to this point since I was 23 years old by buying a dividend stock. Things are about to get a little bit technical, so just keep that in mind. So the first stock I'm gonna buy is WFC, which is Wells Fargo. I'm gonna put that in at $46.98. Make sure to set that limit order, which is a total of $939.60 with a dividend yield of 4.26%. That means for every $100 that I put in here, I will roughly make $4.26 per year. Now they have a payout ratio of a really sweet spot of 49.5%. That means that roughly half of all the money that Wells Fargo makes will go to people like you and I. They'll pay out their shareholders, which is really good because it leaves room for their dividend to grow, which has grown for the last 8 years. Now during the last recession, they actually had trouble with their dividend, but I'm hoping with the tighter banking regulations this time around, they won't be quite as bad. But last year, their dividend grew by 17%, which is huge for something that's already giving us a good amount. So this whole purchase will add roughly $40 to my yearly income. And the second stock I wanna buy is 3M. So MMM, I wanna buy 10 shares at a limit of $158.80 for a total of $1,588, and they have a dividend yield of 3.54%. They have a payout ratio of 60%, which is still really good, but they have increased their dividends for the last 61 years. Imagine that. How many things have happened in the last 61 years? They have weathered all of it. That's insane. And their dividend growth rate was slower than Wells Fargo's, only 6%, but that's in line with what the average of my portfolio has been doing in the last 5 years. So I'm okay with that. Now, I've never owned this incredibly powerful giant, but I've always wanted to, and right now I feel like it's facing some global headwinds with issues beyond its control, and historically this stock has been much higher priced, which is why I've never bought it. I feel like right now is a pretty good time to buy it. Of course, it could go lower with all this uncertainty, who knows, but if filled, this limit order will add roughly $56 to $57 to my yearly dividends. So now that I bought the stocks, I want to track them, and there are several ways of doing that. So let me show you the easy one, which is 3M, because it's a company I've purchased that I've never had before. So I would go to a new line on the spreadsheet and I would put in the ticker symbol MMM. I'd hit tab. I would select an exchange. I could select from Canadian, Dutch, London, New Zealand. So I'm gonna go with USA NASDAQ. I'm gonna put in the shares amount, 10, and the average cost is $158.80. Hit tab, and everything gets filled in automatically. Like the sector shows me it's in the industrials. It shows me the market price, the annual dividend per share, that it pays quarterly. It shows me the dates, and that the annual income has now been increased by $57.60. That's pretty easy, right? Okay, now let me show you the other one, Wells Fargo, which I've already owned before. You can see right here, I have 30 shares of Wells Fargo, but now I'm buying it again, 20 more shares at a different price point. So what do? So the simple way is something that I do, and I'll just update the share amount. So now I will own 50 shares, and I'm just gonna update the average cost to Now it's lower, 47.50, and that's it. But you can also do the tranche method. Tranche. Trancher. Et voila, I'm French. I don't know, tarantula. Now what it means is basically buying the same stock later at a different price point, right? So what do? So let me undo all that. So all you have to do is add a row below. So insert one above or below, doesn't matter. I'm just gonna paste it from Wells Fargo. And here I'm gonna do 20 shares at 40, how much was it? 46.98, so 46.98, and would you look at that? Now I have 2 Wells Fargo entries at different price points in case you're the kind of person that meticulously keeps track of everything in different price points. The spreadsheet supports that too. Et voila. I'm sorry if you're French, I butchered everything. Also, not to sound like a salesman, but I get a lot of questions asked about this spreadsheet. It is available on my Patreon page, but even if you tried to replicate this spreadsheet, it just wouldn't work for you because I'm paying 5 figures a year. It's very expensive to have this automated service, and I'm using my Patreon money to make it automatic because otherwise, without that, it just wouldn't work. Okay, now finally, if you want to see what's in my portfolio, here's a list of all the updated stocks that have paid me dividends in January. I'm gonna sound like a broken record. It's a pretty short list, but the most important part I want you to get out of this is to understand dividends are not owed to you and they can be cut at any given time. So I want you to pay attention to the dividend safety score that I'll be providing along with Morningstar's price rating system of 1 to 5, 1 meaning expensive, 5 meaning cheap. You don't want to buy a stock just because it says 5. That would be dumb, dog. But it's a good starting point, so now let's begin. So January 2nd kicks off the month with 2 dividends from Genuine Parts with a dividend of $3.05, 76 cents per shizzle from 4 shizzles. The next one we got PPL dividend with $17.33, 42 shares, 41 cents per share. Then January 3rd, only 1 dividend from Eastman Chemical, a dividend of $6.60 from 10 shares, 66 cents per share. Way too many sixes there, you know what I'm saying? I'm just saying. January 4th, my birthday, I got nothing. Thanks, Donald. It's not his fault, but I want somebody to blame. Then January 9th, I got paid twice from Omnicom with a dividend of $4.55, 65 cents per share from 7 shares. GlaxoSmithKline, $4.92, 49 cents per share, 10 shares. Then January 2nd, 3 times fat dividend from Philip Morris with $117. Everyone criticizes me for owning this one, but I like Philip Morris. $1.17 per share from 100 shares. Dine Brands, dividend of $18.63 or 69 cents per share from 27 shares. And then Altria with a dividend of $5.04, 84 cents per share from 6 shares. All right, break time. 1 second, water break. Cottonmouth. January 13, Ventus, $8.72 from 11 shares, each paying 79 cents per share. And then January 15th, I got paid 6 dividend paychecks, pretty much all from REITs. Remember, REITs are taxed differently. They're not taxed like dividends, they're taxed like ordinary income. So something to keep in mind going forward. The first one is Cardinal Health, dividend of $16.84, 48 cents per share from 35 shares. O Realty with a dividend income of $10.69 from 22 cents from 47 shares. Then we got Pebblebrook Trust Hotel, $22.80, 38 cents for 60 shares. Then Stag, $5.96, 12 cents for 50 shares. WP Carey, $74.74, $1 and 72 shares. And lastly, NGG, the dividend of $31.72, $1.06 per share from 30 shares. Whew, I am exhausted, but you are probably more exhausted watching this than I am recording this. I'm sorry. In January 17, who's this? Disney, one of my favorite companies, acronym DIS, Diz. Which nuts? Diz nuts. I wish I bought more at that price, but they paid $29.04 from 33 shares, paying 88 cents per share. January 2nd, 1 payment from Cisco, $8.75, just 25 shares, 35 cents per share. January 24th, I got $2.60 from Bank of Ozark. Still haven't watched that show. And January 29th, 2 payments, Bank of Nova Scotia, $57.91 from 100 shares, 51 cents per shizzle, and Gap for $12.13, 50 shares, 24 cents per share. And the last one, January 31st, a REIT, Chatham Lodging Trust, with $17.60 from 160 shares at 11 cents per share. Whew, that took a while. Thank you so much for sticking with that and actually watching that whole thing if you did. I really appreciate that. Follow me on Instagram if you want to be a creeper. I don't mind at all. Get your free stocks from Robinhood and Webull with links down below if you haven't already. And thank you so much for making my life here on YouTube possible. I never thought I'd be here doing YouTube, but here I am, Mr. Struggle, doing YouTube. It's been a crazy journey. Thank you so much. Love you all, and I'll see you all very soon. Monday and Friday, Kirk out. Bye-bye.